In this video, we'll talk about key economic concepts to know currency and trade. Over the last few years, countries around the world have increasingly gotten more connected. And why not? No economy in the world is ever able to produce everything it needs. And several economies have or can produce a lot of resources that they don't need. So, doesn't it make more sense for the countries to trade amongst each other? As you can guess, foreign trade के दो पहलू हैं, imports and exports. Import वो हैं जो हम दूसरे देशों से खरीदते हैं, while exports are what we sell to other countries. Imports allow a country to supply its own economy with expensive, unavailable or scarce products and services. इसीलिए imports बहुत important है. For example, a developing country could import raw materials or machines with advanced technology that are scarce in its country to fast-track industrial development. Similarly, exports open up the global markets for the country, जहां companies अपने products and services को worldwide बेच सकती है. जब हम goods export करते हैं, तो दूसरी countries हमें कैसे पे करती है? जब हम इंपोर्ट करते हैं तब दूसरी कंट्रीज में लोकेटेड सेलर्स को कितना पे करना है और कैसे उसे कैलकुलेट किया जाए, ये हम आपको बताएंगे. आफ्टर ऑल, दोनों कंट्रीज की करेंसीज अलग हैं एंड मोस्ट इंपॉर्टेंटली, हाउ डू यू वैल्यू योर करेंसी अगेंस्ट द करेंसी ऑफ अनदर कंट्री? दिस इज वेयर द कॉन्सेप्ट ऑफ करेंसी regime comes in. Now, a country cannot abruptly set the price of its currency versus another country's currency. Imagine कीजिए that if tomorrow India decided that the value of 1 rupees was equal to $1, now will you be able to import an iPhone for rupees 700? Fancy, right? Not so fast. Now let's take this example forward. When you import an iPhone, you will pay rupees 700 to Apple in the US. But if Apple decides that it wants to make iPhones in India as well, can we buy it for rupees 700? यहाँ तो 700 रुपए में LCD screen भी नहीं मिलेगा, by the way. Or if Apple wants to convert its 700 to $700, is there enough demand for rupees in the international market? That will depend on our export strength. That is how much we are exporting to other countries. After all, any party abroad will be interested in the rupee only if it wants to buy from us. So, this demand for rupee, which dictates its value in the eyes of any party abroad, cannot be a function of what our government decides. Other overseas parties and other countries will factor in our growth, inflation and import-export strength before deciding the fair value of our currency. In fact, history has taught us that if a government or central bank decides the price of its currency, also called a fixed currency regime, it's a bad idea. But why? There are just too many factors affecting the currency price and its demand. Hence, most countries have over the years adopted the floating currency regime. In a floating currency regime, the government or the central bank does not interfere with its value. Instead, traders in the forex market, both domestic and overseas, buy and sell currency to decide its price versus other currencies. Apart from the balance of trade, investors and traders in the market take into account many other factors. These include the country's economic performance, its inflation outlook, interest rate differentials, capital flows, etc.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.